At the heart of the INSEAD 2008 Leadership Summit devoted to global citizenship and our panel on Africa, Engaging with Africa, Can Business Leaders Afford to Ignore This Continent? With me today, Imoni Akpofuri, Regional Country Manager of International Finance Corporation, and Simon Harford, Head West Africa of Actis. Thank you for being here.
Pleasure.
To begin, could you give us a broad overview of the economic situation of Africa and how it's developed in the past years?
Well, I think at the moment everybody agrees that the macroeconomic situation in Africa has really improved over the last few years. Growth right across the continent has been above 5%. In fact, last year it was just below 7% in sub-Saharan Africa, a bit less when you take the whole of Africa, including North Africa. Projections just out from the IMF are projecting that next year in Africa we're going to have at least 5 countries growing at more than 8%. Another 5 will grow at between 6 to 8, and even conflict-ridden countries like Cote d'Ivoire are going to be at the 4 to 6% growth rate. A lot of this, we agree, is largely driven by the commodity prices and the high oil prices. But again, it's not just that. It's the financial sector growth and its stability. It's the fact that there's been debt relief. Macroeconomically, I would say that Africa is looking quite good.
Who would you say are the players that are most likely to fuel this growth and benefit from this growth?
Clearly, it's always dangerous to generalize about a continent that's not just a lot of countries, but also the dynamics of the northern part of Africa associate perhaps more with the Middle East compared to sub-Saharan. But in general, and the data that Imoni gave is right. And interestingly, it's perhaps even stronger than that if you extract oil GDP growth. So for example, in some of the biggest economies like Nigeria, the non-oil GDP growth is even higher. Now that actually is an indication in terms of who can benefit from this. It's very much more than just resource companies, because one of the exciting developments is that economies are diversifying. And while the resource prices and cycle is contributing, it is not the whole story by any means. So it's hard to think of any type of business that can't take advantage of the economic growth in at least one, if not more, African countries, because obviously you've got very different sorts of countries and different sort of sectors. Telecoms, many of us are aware of the phenomenal growth in telecoms across Africa. Other consumer businesses, financial services, FMCG, because because these are consumer businesses, they play to the underlying population base with getting on for 1 billion people across Africa, and those billion have an increasing growth in the middle class. And for companies that have any ability to reach into what's known as the bottom of the pyramid, the lower demographic levels, they of course tap into even bigger population numbers. So virtually any business that can talk to the consumer base of Africa has for many years, this is not a future story, this is a present story, is already growing at remarkable rates, 30, 40, 50, 60% year on year. Beyond that, we're starting to see the next level of, again, this is excluding resources, which we all know the resource story in Africa. We're starting to see the next level of sectors that are sometimes supporting that consumer demand with services or more indirect consequential activities, so logistics, for example, and some of the peripheral financial services. And the core banking comes first, often, and also banking the unbanked, which some of these official statistics don't remotely capture the actual economic activity of the country, many of which have got a big informal sector. So for example, insurance, mortgages, and the IFC is doing some very interesting work trying to stimulate mortgage activity in some of these countries. There's no real shortage of sectors that are benefiting from the growth.
Since this growth can be fueled by private businesses, what role do multilateral organizations have and can still have in this environment?
Well, I think one of the things that we as IFC try to do is be what we call the lender of last resort. So we're focusing very much on the business environment. How do we facilitate an easier business environment that then lets the private sector to come in? Remove government, so reduce barriers to private sector coming in, reduce the amount of time it takes to open a business, reduce the amount of time it takes to foreclose, create one-stop shops so that instead of an investor coming into a country and having to go to 10 different ministries, they can go to one place and get all the information they need. Then we come in alongside that and we provide the funding. And a lot of the time it's long-term funding. So we're either helping create the financial sector, so we'll give credit lines to banks to allow the banks to then be able to lend longer than 1 year to a business. If you're investing actually in assets and long-term assets, you can't use it, make the investment with short-term money. So most banks don't have enough of a supply to be able to lend longer than 1 to 3 years at most. So we could come in, say, as the IFC and give them a 6-8 year line of credit, which then allows them to extend the tenor that they're going to give to the final beneficiary. We then also fund long-term projects, infrastructure projects, of course, where there is a private sector component. We don't fund governments. And I think when you look at sort of the multilaterals, we also have a lot of leverage and relationships with governments. So when the private sector has concerns, we are able to then table them with the government and say, look, this is a concern of the private sector. You say you want to help use the private sector to actually grow your economy. These are their concerns. How do you want us to work with you and the private sector to improve that? So we're now creating quite a few business forums. We have one in Sierra Leone, we have one in Liberia, which are really dialogue forums for both the private sector and government. So it's a combination of a lot of things, but focusing very much on issues that are stopping the private sector from coming in to invest in a country.
European countries have a long presence in Africa, have had a presence for a long time in Africa, and we're seeing Indian and Chinese players coming in quite recently and massively to secure the sourcing of commodities, for instance, and in exchange financing infrastructure programs. Do Western countries still have a role to play in Africa, and what is that role?
The answer is, of course, they have a role. I'd actually turn this around. I'd say the really interesting question, if I may say, is what role does Africa have in its future? And actually, Africa starts to drive the dialogue and the behavior and the development, as opposed to any sense of it being on the receiving end of whichever international geography gets interested in Africa. And I think looking at it through that lens, we don't know how this is going to play out, but it's, I think, great progress. And first of all, again, one can't generalize, but many Western companies have played a very productive role in many African countries over the years. First of all, making goods and services available essentially through distribution, but clearly that creates jobs and it transfers practices and so on. And many of them have then gone further back up the value chain in terms of setting up manufacturing and their own distribution, et cetera, et cetera, et cetera. So I would caution against any sense that Western companies have been a negative influence in Africa. It's, as usual, it's a mixed story. But Western companies have been involved in both resources, but also many other parts of the economy. Not just FMCG, but telecoms, financial services, and so on. China, which has perhaps taken greater interest in Africa than India has to date, China has been predominantly resource-driven. We know the story about China's own projected need for resources over the coming years, and as a well-planned economy, they're very well aware of that. Hence the primary, not the sole, but the primary reason for Chinese interest in Africa. And we've seen some very newsworthy arrangements created between essentially the governments, Chinese government and the relevant African government, to allow China access to whatever resource it is, whether it's oil or minerals or whatever, in return, typically for some form of infrastructure commitment from China to Africa. Infrastructure in Africa still lags badly behind. But this is relatively early days. It's the last maybe 2 years that there's been a meaningful pickup in the China-Africa axis. And what has started is the first half of that, which is the resources being made available to China. What has not yet really started is the quid pro quo, which is the delivery of the infrastructure or whatever the other commitment was towards Africa. And I think as that plays out, and has it truly been reciprocal, and Does both sides feel that this is a sustainable relationship? That's one story that's going to play out. Then overlay your question regarding India. India, relative to China, is getting involved sort of systematically in Africa a little bit late in the day. For example, it's this year that we had the first major India-Africa conference at a political level, political and business level. The second China one was last year. Why? I mean, we can discuss why India geopolitically is a little bit behind China, but part of it may be because it's a slightly less of a centrally planned economy, and it's got significant opportunities and also challenges domestically that it's very focused on. Whatever the reason is, India, yes, of course, is interested in China. How their interest will materialize, I think, is a bit early to tell. Clearly, resources will play a part, but India also has a relatively diversified economy and has a lot of non-resource activities that it could very usefully set up or indeed transfer to Africa. Whether it's IT, retail in India, for example, is more developed than in many sub-Saharan African countries. So it's early days, and the other encouraging sign is that African countries and governments are seeking to manage this dialogue. And they are self-critical of the arrangements that have been struck so far, and they are conscious of whether the reciprocity is truly there. And they're also conscious that it's not just China that is interested in Africa. There's India as well. There's Russia as well, who very recently have made some very public, governmental level indications of interest in Africa. So my sense, and we can only speculate, is that this is not going to be about a single geographic bloc that is the next generation of international involvement in Africa. It'll be probably all of them. And what we all hope for is that it's a truly reciprocal impact, because both geographic blocs have development to do. But secondly, that as much as possible, the African nations will take charge of their destiny and make sure that they get, for Africa, what's best for them.
Simon Arford, Head of West Africa of Actis, and Imoni Akpofure, Regional Country Manager of International Finance Corporation. Thank you very much.
Thank you.
It's been a pleasure.